Welcome to the monthly pyramid portfolio update as of Monday, December 1st, 2025. As usual, I hope you'll find the information in this video useful, but disclaimer, please note that this is not investing advice. It's just my portfolio as it stands today and it can change at any time without previous notification. Following an investment strategy without doing the work yourself is almost guaranteed to result in losses. So please be careful since it's your responsibility to do your own research before investing. At the end of the video, in this week's bonus section, we will be discussing if the average retail investor can ever really be successful in the markets. First, let's start with the usual look at this month's activity. In terms of buying, I added a little bit to my Arobs position, which is a big Romanian tech company that is a serial acquirer of smaller software companies that have connected businesses. One of the ways a company can become a hundred bagger is this. But Arobs is not yet a bet because they underperformed so far, but the acquisition path they're on, over 10 companies since my initial adding it to the watch list, looks promising and the price is really cheap. I also added another tech company, SafeTech, which is a cybersecurity play, but the position is still quite small. Last but not least, I also got a little bit more Bitcoin with the recent drop and received a few new altcoins via the Binance and Revolut Learn and Earn programs. And, as usual, I did not sell anything this month. One honorable mention for the proposed trade last month, the Christie's IPO, it actually went up 12%, but the amount is so small after the 32x oversubscribing that it didn't really make sense to sell. The profit would be non existent, so I decided to keep it for a bit longer on the watch list. In terms of cash flow, I got only a very small dividend from One United, but the next month I should get 3 government bond coupons and 2 of them should also reach maturity, so I will have a new inflow of capital to end the year with. That being said, the portfolio as of December 1st, 2025 is largely unchanged and looking as follows. Please pause the video if you want to analyze each investment in more detail. And finally, the current pyramid allocation portfolio looks something like this. Overall, the portfolio was down 1.41% for the month, with crypto falling significantly, bringing the year-to-date return of the pyramid portfolio at now only 5.61% plus living expenses. Now, before going to the next section, if you are interested in the subject, please leave a like and subscribe to the channel. It really helps bringing this completely free information to more and more people. As mentioned at the beginning, in today's bonus section, we'll be discussing if the average retail investor can ever really be successful in the markets. To try and answer the question, as part of the Standing on the Shoulder of Giants series, we refer back to one of the all-time greats of investing, the man we also mentioned last month, Magellan Fund Manager Peter Lynch, who has one of the best track records out there. And, perhaps unsurprisingly, he said that yes, the average investor can outperform the so-called professionals, which kind of makes sense, otherwise we wouldn't be here discussing the subject today and the channel wouldn't exist. There are a few points where the retail investor can position themselves better than the institutional investor. First, choose your field of expertise. While diversification is a great strategy, the bulk of the profits are usually made in a small number of assets. Choosing those assets can be much easier for a retail investor than the professionals. For example, if you work in a specific industry, let's say IT, and are focusing on IT companies, you might have an edge on the professional investor who relies on analyst reports. Analysts, very often, might know less than you do on that particular subject, being it cybersecurity, cryptography, cloud, quantum computing, etc. The same is true in most sectors. You just have to look at your day to day life with an investor's eye. You know, how can this benefit my portfolio? Like, if you work at a windshield company that makes windshields for Tesla, you could extrapolate the number of cars produced that quarter by the number of windshields. Of course, this is not easy since they have multiple suppliers, but if you are motivated, you can track over time and see that your company supplies X% of reported numbers, which might give you an edge over others. Now, this works the other way as well. if you are an artist, maybe quantum computing is not a sector for you, or vice versa. If you are a mathematician, maybe high-end fashion brands might not be the best place to invest. So you need to know what you're good at. Secondly, you can, as a retail investor, focus on the long term. This might come as no surprise because we've been hammering this concept here every day with the 100 baggers and don't sell too fast and be patient in both the buying and the selling. But where the retail investor has another edge is that they can hold an investment long term. This means 5 to 15 years, while institutional investors need to report quarterly or maybe yearly results. While theoretically they can also hold long term, in practice, if you report something that underperforms quarter after quarter after quarter, it's harder to keep it for a decade. Next, the fact that we are managing smaller amounts of money should result in broader opportunities and better results over time. One truth in investing is that if you are any good at it, people will give you money, and once you have a sizable amount, most investments become unavailable to you. What do I mean? We see that even the great Warren Buffett has this problem. If you need to show returns on billions of dollars, a small 10 million company, even though it might be a good investment long term, it doesn't really move the needle for your portfolio, but it does for a retail investor with just a few 100,000 or even a few million. Last but not least, today, the age of the professional investors is much smaller. We all have more or less the same tools, like online brokerage accounts now offer whatever you need, and we all get the same news real time. The only differentiator is the decisions we make based on the information we got, and more often than not, we have months, if not years, in which we can make a good decision, so there is no real rush. I can't recommend Peter Lynch's book One Up on Wall Street enough. It's full of timeless wisdom and the man is also surprisingly funny, so you should check it out. In conclusion, it can be done, but that doesn't mean it will be easy. Far from it. You will have to dedicate yourself to it and won't be able to do it by spending just a few hours a month on it, at least not at the beginning. When you get competent enough, too much effort might actually hinder you since it will make you more active and sometimes can be a hindrance, but at the beginning you will need to treat it very seriously for a significant amount of time. Most importantly, you will have to cultivate the mentioned investor's eye and look at life with an investing mindset. How can this result in a successful investment? What does this event, political, economical, etc., mean for my investments? How can it help or hinder my portfolio? Secondly, you need to cultivate patience and resist the FOMO or panic selling or the imposter syndrome. The psychological aspect of investing is very important. If numbers were sufficient to invest successfully, the high frequency traders would have taken over the market by now. And last but not least, you really need to cultivate a love for the game. If you don't like it, it's very hard to believe you will be very good at it. This is true at everything in life in general sport, cooking, anything really, you need to drive some sort of enjoyment from it, which in turns will reflexively make you work harder at it and become better. I've been thinking for a few months to make the videos rare, maybe quarterly or any time an important update arises, because first, there are not a lot of topics left for me to discuss. You can notice if you watch a few of the videos that some ideas keep repeating themselves. And secondly, doing it every month actually leads to some hyperactivity on the trading account that is clearly not helping, and I want to A/B test if doing it less will result in better outcomes. Of course, we can revert back anytime and make them monthly again. Anyways, that's it for today. Thanks for watching this video. I hope you found it somewhat useful, and if you did, please don't forget to like and subscribe. See you next month. Au revoir, mon ami.